All right. Once again, thank you everybody for coming. My name is Noel Booker, Noel A. Booker Sr. with businesscreditbuilder.us. And at businesscreditbuilder.us, what we do is help businesses build their business credit and access funding. Okay. Today, we're going to talk about top questions about the business loan underwriting process answered. Okay. I decided to do this one because I get a lot of people just submitting applications and not really understanding that they're just wasting their time when you're not prepared to submit an application. Okay. People are not prepared when they submit applications. So if you understand what they're going to be looking at, you know not to be wasting time. I'm just trying to tell you, I'm just trying to keep it real here. Okay. That's why I decided to do this one right here. Okay. Here goes the contact info. Noel A. Booker Sr. I'm the CEO at businesscreditbuilder.us LLC. I got two buttons at the bottom, right? How you can get a free guide on how to build business credit. Just get the free guide. I'm trying to tell you, you go to businesscreditbuilder.us/free guide, right? And then when you want to talk to me about the services that we provide to help you build your business credit and access funding, also websites, accounting, stuff like that, what you would do is get a free business credit consultation at businesscreditbuilder.us/consult. Okay? Okay, let's get started. Let's get this thing going, right? Okay, here we go. Top questions about the business loan underwriting process answered. Make your business credible in the eyes of the lender. Okay? Make your business credible in the eyes of the lender. Loan underwriting is the process lenders use to determine the risk that a borrower will not pay a loan. A high risk of non-payment means higher risk interest rates or denial. Business loan underwriting is a little different. When it comes to business loan underwriting, underwriters are looking at the owner's information as well as information related to the business itself. This is more complicated and usually takes longer. Here are some common questions about the process and some tips to make things go as smoothly as possible, right? As possible. You might not have every single thing, but you want to make sure you're in the best position that you can be, right? Okay, question number one. What are underwriters looking for? Loan underwriting is not a game of gotcha. Lenders want to make good loans. After all, that's how they make a profit. They need to see not only that the business can repay the loan and that there is a high probability that you will pay the loan. They also want to see how you will handle repayment if something unexpected happens. Do you have a plan for making payments if things don't go as planned? Okay? They just want to know that you can pay a bill, right? Now, how to answer question one most effectively. Provide all requested information. Have financials professionally prepared by an accountant and reviewed by a tax attorney. Fill out the application thoroughly and carefully. Okay? That's the information that you need to know about that. All right? Question 2, what will I need to provide to the underwriter? Generally, loan underwriting requires you to provide basic personal information such as name, address, social security number, your business name, or doing business as DBA name, your employer identification number, a copy of your business plan. Copy of the business plan, that's definitely like when you get the SBA loan. And for bigger loans, right? Not so much the little loans, they don't want to see the business plan. But for the bigger loans, they do. Information about collateral if you're applying for a secured loan. Details about your business, including time in business, annual revenues, number of employees, and more. Financial records, including tax returns, bank statements, and pay stubs, both personal and business. Okay? So this is how you be in the best position, right? Okay. This is the answer to question 2, most effectively. Write your business plan long before you apply for a loan. Have a mentor or local small business development center help you. Also, gather records requested and review the details for accuracy. Here, I'm gonna give you a small business development situation called Operation Hope. Operation Hope, all right? They have these classes for small businesses that are free. And part of it is the business plan writing situation. And they give you resources, okay? Let me throw a name out, Laura Sims. So if you look up Operation Hope, Laura Sims, she's gonna help you with that, all right? A lot of people don't have that information right there. How to get somebody that can help you write a business plan, okay? Laura Sims is gonna hook you up. Operation Hope, look her up, all right? All right, let's go to question number 3. How will the underwriter use the data I provide? Good question. The data you provide for loan underwriting will be used to do the following: verify business revenue, verify personal credit score, verify collateral, determine personal equity in the business, debt service coverage ratio, debt to asset ratio, loan to value ratio. Okay? So if you are not aware of these ratios, do some research. I'm telling you what they're looking at. All right? Verify business revenue. If there's enough revenue to support debt payments, you aren't getting the loan. Most lenders have a ratio that helps them calculate how much they are willing to lend to your business. That is, if they approve the application. Generally, approval for any amount over 10% of your annual revenues is not likely. This is especially true for traditional lenders. Of course, it depends heavily on whether you have other business debt. Verify personal credit scores. With traditional lenders, your personal credit score is going to be a part of every loan decision. In fact, in some cases, it will determine whether or not they will pursue your loan application at all. Banks generally look for scores in the 700s, though some will go as low as 680. The SBA has a minimum threshold around 650. In contrast, open up the front door, Mom. Sorry about that. In contrast, only online lenders will go as low as 600 or even 500 in some cases. If you get approval, don't tell them to come in, just grab it, Mom. Just grab it. Just grab it, Mom. Yeah. All right. Thank you, man. Appreciate it. All right.
All right, thank you.
Sorry about that. Yo, I apologize. Totally unprofessional. All right. We're back on track. Okay. Let me just start back. Banks generally look at scores of 700. Okay, we already did that. In contrast, online lenders will go as low as 600 or even 500 in some cases. If you get approval, the lower your personal credit score, the more expensive the financing. You may also have to provide a personal guarantee or sign off on a UCC blanket lien if your personal credit scores are not or particularly low. Okay. Verify collateral. Not all lenders require collateral, but most banks and the SBA do. While the SBA doesn't always require that you fully collateralize a loan, they will require any collateral you may have available. Online lenders will often apply a general lien on business assets. Also, most will require a personal guarantee on small business loans. Determine personal equity. Okay? Underwriters may want to see how much money you have invested in the business. Lenders want to have some personal skin in the game. Skin in the game. They want to see skin in the game. All right? If the business defaults, you have something to lose. In addition, lenders may use the data to determine a number of ratios that can help them in the decision-making process. Okay, debt service coverage ratio. This is a calculation of your business income and the total amount of business financing you already have. It is calculated as business income, debt, business debt. All right. That's the calculation divided by business debt. All right. If your ratio is below 1.25, it will be difficult to get more financing. You follow that? All right. Keep up with me now. Debt to asset ratio. This is especially important to underwriting if there isn't a collateral requirement. Okay. It shows whether you have enough assets to cover the loan in the event of default. For example, do you have enough equipment or property to liquidate and cover the loan if you can't make payments? A ratio of 1-to-1 is favorable. All right, debt to asset ratio. Loan to value ratio. This only applies if there is a collateral requirement. Lenders really want to see that your collateral is worth at least 20% more than what you are borrowing. That's why you need a down payment of around 20% to buy a car or purchase a new house. The lender wants to make sure you meet this ratio. The loan to value ratio. Okay, how to answer question number 3 most effectively. Since you know the formulas often used in the loan underwriting process, you have your accountant do the math. It doesn't make any sense to apply if the numbers aren't in your favor. If you are close, it may be worth a shot. Running the numbers can also give you an idea of what may be required in terms of personal guarantee or collateral. This is helpful information to have before you apply. Okay? So I don't want you out there wasting time. Do some calculations and see whether or not you're going to pass they internal testing stuff, right? Okay. Question 3. What are the deal breakers? All right. There are a number of issues that an underwriter may uncover that can mean in gain for your loan application. If you know of any of these issues before you apply, definitely disclose them. Knowing ahead of time will allow the underwriters to take note of mitigating factors as they go. If they come across any of these on their own, it is probably game over. Okay, let's run this down. Recent business cash advances or loans that are discovered but not disclosed in the month-to-date bank activity. An excessive amount of negative days in the bank activity printout. A criminal background history. Undisclosed tax liens or those not in a payment plan. A recent bankruptcy within the last 6 months or any open bankruptcy. Unsatisfied excessive or large judgments, less than 50% ownership, depending on the lender, a major drop in revenue, negative landlord references, an undisclosed default or a restructured business loan or a cash advance. So all of these things you want to disclose beforehand. You don't want them to find this out on the back end, okay? It means game over in most instances. No. All right, so make sure you all get this free guide to get the business credit guide on how to build business credit. Apply at, you can apply for business loans at businesscreditbuilder.us/business loans or get funding. I think I should have changed that. Oh, I see what I'm doing there. Okay, there's a business loans page. But on the website, businesscreditbuilder.us, right? There's a button that says get funding. Or you go to the business loans page and see about all the different business loan options that we do have, all right? One of the most popular products that we have is our unsecured hybrid program, in which you get access to $150,000, up to $150,000 if you have good personal credit, all right? So that's good money for startup businesses, okay? And that's on that page as well. Any questions out there before we end out? Because I'm done. Was that good information or not? What, did y'all waste your time? Or y'all knew that stuff already? All right, I appreciate that. Okay, well, if there's no questions, we're gonna be out of here. Thanks for coming. Appreciate that, Miss Bankston. She's another satisfied client over there, Miss Bankston. She got loot from over here. Tell her, Miss Bankston, she got loot. She got loot. She went down and she got loot from Business Credit Builder. We helped her out, stack up some dough a little bit. All right, y'all. No questions? I can't believe it. What up? Okay. All right. It's dinner time over here. I got some Jamaican over here. So, all right, y'all. Y'all have a good night. Thanks y'all for coming. Make sure you get the free guide, businesscreditbuilder.us. If you don't have no more questions, we're going to be out. Appreciate it. 1, 2, we out.